Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at the US E-minis and how they unfolded yesterday, which was Monday the 24th of November, and show why it's important to follow all the US E-minis, for example the ES, YM, NQ, and actually the Russell Index as well, the TF. So today I'd like to show you a good example of this. If we look at how yesterday unfolded on the ES, you can see it really was a choppy, narrow range day. The market gapped up, just chopped sideways all day, and we didn't really get any setups. It was very, very quiet. However, if we compare this to the Russell Index, which is the TF, let's have a look at what unfolded here. Here we actually got a strong rally later in the day, and actually before that we had a couple of automatic MTPredictor trade setups using the standard guidelines of the STF. The first one here, if I place the analysis on, would have actually resulted in a -1 hour loss. Remember, we use correct position sizing to keep our initial risk small and under control. The next trade setup came in here, and as we can see it wasn't stopped out, almost, but not quite stopped out. Eventually would have gone to the first target there for a profit of 4.9 or almost 5R. And that's the point of this, is position sizing keeps the losses small and the profits large. So even though there was one loss, one profit, the profit was almost 5 times greater than the loss. That's what makes money over time. In fact, actually on the 5-minute chart it was actually even better set up. If we look at the 5-minute chart, there was a losing trade here early on, you can see with our history triangle here. But then we actually had a TS3 buy setup a bit later on in the day here. Again, standard trade setup in the direction of the STF. Let's now place the analysis on. Right mouse click over the blue buy bar, do analysis, and look at this. What a great trade. Again, position sizing keeps the initial risk small under control. The market went up here to hit the first target, which is where you'd have come out because our STF was less than our strength band down here, which is what we define as being a weak market. In other words, it's not going to trend much further. And look at the profit. The profit here would have been approximately 9 times greater than the initial risk. In other words, this initial risk here, we kept the loss or the potential risk small, and the profit would have been 9 times greater. That's what position sizing does. For you guys who are a bit more experienced, let's have a quick look at the 15-minute trend. And here you can see that we actually had a TS3 buy set up the day before. So if we place the analysis on this, you can see the large degree trend was actually up. It was very nicely up, and actually we haven't even quite reached the target on the 15-minute chart. Therefore, the TS3 buy setup, which was here on the 5-minute chart, would have been in the direction of the trend. Yes, we did have a minor high at this DP from the prior wave B, which is where we anticipate there's going to be minor support and resistance of a ABC correction or a TS3 trade setup, but as you can see that only gave us a minor wiggle down into our 5-minute buy setup. But hopefully you can see that the large degree trend was definitely up off this TS3 buy setup. There you go. If I take all the analysis off, you can see it was clearly up there as well. So that means that our 5-minute trade here yesterday, which was here, was clearly in the direction of the large degree trend. Result a very nice 9.1 hour profit. We also had a very nice sell setup on the previous day. You can see here, if I place the analysis on, that would have had plus 5R at the first target, or as we were discussing in our training webinar, because the STF was strong in this case, past its strength band, you'd have probably trailed with your ATR stop, which are red dots here, for a nice 5.8R profit. The only thing the day before was because this STF was blue, you'd have to have been an advanced trader to see the larger degree trend. Let me just show you this now very quickly. So for this we go to the higher time frame chart, which would be the 15-minute chart. Here's the last swing into the major low. There's a major low here. Here's the last swing into the low. So this is a pivot we'd use for our DP resistance. And as you can see, when I place it on, that would have actually nailed the high of the day on last Friday, the day before. Can you see that? Remember, these DPs are leading indicators. They're on the chart. They're in advance before the market even gets there. So what does that tell us about the shorter term trend? If we go down to the 5-minute chart, can you see now how this would have nailed the high of the day on Friday, therefore would have turned the large degree trend to down. Sorry, my mouse has got a bit stuck here. To down, which means that TS3 setup there would now be in the direction of the large degree trend of this 15-minute resistance. Therefore, that would have been a good one to take. So overall, it's been a good couple of days on the Russell Index, where a nice TS3 sell setup on Friday, but then the one I really want to look at was this TS3 buy setup on this 5-minute chart that, as you can see, went right into the first profit for a nice, or the first target for a nice 9.1 hour profit. And this is a good example of what I teach, is that I like to see trade setups where the pattern is nice, clean and clear and obvious. So in this case we had a lovely clear and clean ABC correction here into a nice clean setup. Particularly when you go to the 15-minute chart, you can see the large degree trend is clearly up. Sorry, that's 30 minutes. 15-minute chart, you can see the large degree trend is clearly up off this TS3 buy setup, so therefore there was no question at all. In other words, it was nice and clear. Compare this to the ES. If we go to the 15-minute chart of the ES, which we were looking at earlier, we're sort of mid pivots. The day was chopping sideways here. We were sort of mid pivots. There was no real clear large degree trend, and as we saw before, when we go down to the 3-minute chart, it was choppy and sideways, no real clear pattern. When we go to the 5-minute chart, again it was choppy and sideways, no clear pattern. This is what markets do. They tend to unfold through or they have periods of when they're really choppy and horrible, and they have periods of where they're really clear and clean and obvious. This is what I call the cyclical nature of trading. This is why we teach that the best way to trade is only when the pattern's clear. In other words, when you have a choppy, horrible pattern here with no clear large degree trend, move to another market in another time frame. So in this particular example, moving over to the Russell Index yesterday, really clear, obvious pattern, a very nice, large, profitable trade. And that is the best way to trade, the best way to use the MTPredictor, and it's what we teach in our training webinars. So hopefully this has been a good example of how MTPredictor has unfolded the last couple of days, particularly yesterday, which was November the 24th, where we looked at some other markets, in this particular case the Russell Index. There won't be any videos later in the week because we're just coming up to Thanksgiving, so the next video I'll do will be next week, unless there's something particularly that I want to share with you later in the week on perhaps the European markets. But otherwise, everybody have a great Thanksgiving, and hopefully you've enjoyed today's MTPredictor webinar, video showing some nice trades on the Russell Index.